Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management. And today I'm joined by our Senior Economist, Bob Kinane. Welcome, Bob.
Thanks, Sinead.
Bob, another strong performance for global markets in February. Was the main driver of that the positive rhetoric that we've seen out of the US-China trade talks?
Yes, it was. So global share markets were up about 3% for February. And the primary driver was hopeful signs that the trade dispute between America and China would be resolved. So we got some signs from President Trump that he was willing to delay raising tariffs on Chinese goods from the March 1st deadline. And we also got signs from China that they're more willing to buy American goods such as soybeans and alike. So from that point of view, global share markets rallied on these hopes.
And the Australian market did especially well, up over 5% for the month. Why was that?
Well, the Australian share market benefited from higher commodity prices. So iron ore went up 15%. Most of that was on the back of, unfortunately, a tragedy in Brazil with a dam collapse. So Australia, as a key supplier of commodities such as iron ore, would take more market share in that situation. But we also, because of the global share market, positive signs there, copper prices rose 6%. So that helped our resources shares rise more than 7% for the month itself. We also got some signs from the Royal Commission investigation into misconduct within the financial system. Bank shares rallied quite strongly when that was announced because from the banking point of view, the business models, tighter financial regulations, we had an end of the uncertainty. So we saw a relief rally in bank shares in particular. So that was seen as a positive for the share market.
And yet economic data out of Australia has been quite mixed in recent times. Has that led the Reserve Bank to indicate some changes to its interest rate policy going forward?
Yes, so what the Reserve Bank has signalled is that interest rates are on hold for a considerable period, and it noted the phrase evenly balanced in terms of future risks for interest rates. So what it's trying to say is there may be a case for raising interest rates because of the tight Australian labour market. We've got very strong jobs growth, the unemployment rate is low, so that would indicate the need to raise interest rates. Against that is the fact that the housing market is weak, house prices continue to fall. So if you're looking at Sydney, Melbourne market, price falls between 9 and 10%. That indicates some downside risk to the Australian economy in terms of consumption. And we also have mild inflation pressures. So the Reserve Bank is saying we're balancing out these risks with the labour market being strong and the housing market being weak.
And yet the market is pricing in the possibility of a rate cut later this year. Is that true?
Yes, so the market's pricing is essentially an 80% chance of an interest rate cut by November of this year, which looks rather ambitious because of the RBA's rhetoric is things are evenly balanced. So the market is taking a view that the housing market weakness, the slowdown in consumer spending that we've seen so far, particularly retail sales, would indicate that the Reserve Bank has to cut interest rates. But at this stage, we think that's probably too ambitious and an assessment. The economy is not weak enough to justify the Reserve Bank cutting rates.
Okay, and you also mentioned that commodity prices were up quite strongly over the last couple of weeks. Usually that means that the Australian dollar would rise. Was there something else that occurred that led the Aussie dollar to fall slightly?
Well, what we saw is a much more resilient American dollar. But also we saw the fact that with that Reserve Bank commentary on future interest rate risks, basically the market is starting to favour the Reserve Bank edging its way to cutting interest rates. And because of that, that takes the support away from our currency. So that's really why the Australian dollar fell.
Thanks for your time, Bob.
Okay, thanks, Sinead.
Thank you for joining us.